This commentary is not intended to be investment advice, investment research, or recommendation. Please consult your investment professional for your own circumstances. Hi, this is Peter Hans, and welcome to this week's episode of Between Two Chains. It's our first recorded episode in 2023, and Happy New Year. It's definitely good to be past 2022 and into what will be certainly a very different year than last year, as well as 2021. In this episode, I'm joined by Arca CEO and co-founder Rayne Steinberg, as well as our CIO, Jeff Dorman. We each have three predictions for the digital assets market in 2023, and we share them and discuss them. There's a lot of very interesting overlap touching on regulation, new entrants into the market, what is needed to really increase activity and show positive use cases. And interestingly, we don't really get into price predictions at all. I think a lot of what you will hear is, kind of going back to the basics and a focus on the underlying technology and really, why we, and I think many of the listeners are so interested in blockchain technology and crypto in the first place. So I hope you enjoy the episode and thank you for listening. Here's to a great 2023. This is Peter Haas. Happy New Year. Good to finally be out of 2022. And because we're in a new calendar year, of course, everything will change and it'll be all up every day again. Probably not, but it's nice to say. So I've got joined by Jeff Dorman as typical, and also Arca CEO Rayne Steinberg. And one thing that we like to do here at Arca is put out our yearly predictions, and I have Rayne and Jeff on to go over some of their predictions, and we'll also touch on a couple of mine, and you can also access these on the Arca website. But gentlemen, welcome. Happy New Year to you both.
Thanks, Peter. Yeah, great to be here. Great to see you.
And yeah, Jeff, always a pleasure. Always a pleasure.
Yeah. But I was actually looking through our 2022 outlook. We had a fair amount of accurate calls for 2022.
Yeah, that's probably fair. I mean, I can only speak for myself, right? And I know my biggest theme, and I think there was plenty of evidence for it going into 2022, was about basically I saw a pretty large discrepancy between the who the marginal buyer is and who the marginal seller is. I just saw there was a lot of institutional due diligence there were a lot of big allocators, big investors looking to invest into the space. I think some of those timelines started to get pushed back a little bit early for macro reasons, as well as pain felt in other parts of their book. And then you had Luna, and then you had FTX, and basically that I don't think the process of that prediction was incorrect. I think the outcome of the prediction was incorrect, so I can't be upset with myself or my process, but it was wrong. So hopefully I'm a little more right this year. But yeah, let's get into it. And Rayne, I'm going to start with you. Your first prediction, and we have three each here. No, we'll get to all of them, but you it's if I had a paraphrase for you, it's like we're going to get back to kind of the nuts and bolts of blockchain as a technology, and we're going to look at real world use cases and what these kind of core tenets of blockchain are around decentralization and transparency and the immutable nature of blockchain. And Jeff has a little bit of a decentralization theme as well. So yeah, I'd love to hear your thoughts and expand. And if you want to get into more, please do.
Sure. I think for what we were saying, just looking back at 2022, you could really describe it as getting the trees right, but kind of missing the forest, which is, I think, what we kind of did with blockchain a little bit. We had some explosive growth in some areas, but they were in the areas often of centralized exchanges, centralized counterparties, areas that weren't really in the core tenets of blockchain, which is decentralization, transparency, auditability. And the whole reason that blockchain and digital assets were launched were these concerns about centralization and trust centers and things like that in the financial system. So when you recreate the financial system in a less regulated, newer, run by people with shorter biographies, and then you inject a very high desire to make a tremendous amount of money into that in a short period of time, this is the type of result you can get. So what I really see is the projects and the areas that are going to really flourish in this environment are the ones that really do lean into those ideas: decentralization, transparency, auditability, all the core principles of blockchain, why we're here. But again, they move a little slower. This is the issue with blockchain and everything that we see. Centralized systems are easy to direct quickly, move fast, nimble, and things like that. Decentralized ones are very hard to organize, hard to move, hard to coordinate, and we still haven't kind of gotten that balance between utility, how they work, and the promise of the value proposition. So I think this forcing factor of like Luna, FTX, and this wipeout of value, and really showing that you have to take those things seriously, is going to really demonstrate the value proposition of things like that, and projects that really lean into that are going to be the ones that come to the fore this year.
Yeah, and I think there are, so many parallels in hindsight with what we saw, in the tech bubble of the late '90s and kind of early 2000s, and frankly, probably many other technological innovations and revolutions throughout history, where you see price action based on potential, eventually get too far beyond the actual implementation of real world use cases. And there was a lot of trading and fundamental and financial engineering and quote unquote degen activities right throughout the past in 2021 especially. And not that the kind of core narrative around what those were attempting to do wasn't sound, but it wasn't actually being done. So I think one of the things that you talk about in your predictions is utility, tangible value propositions, long lasting adoption of digital assets. I think that's something that real investors are starved for, right? Like,
Yep.
Where's the real world use case? And we saw a lot of that coming out of the .com bubble. Just because
Exactly.
you put .com doesn't mean you're going to be the next Amazon. And even Amazon, frankly, right, like at the time was a online bookstore, right? Is that
Exactly.
there's a reason why it fell to $1, right?
Yeah.
So how do you foresee the timeline of starting to see some of these tangible use cases? Because I think that's really the tipping point that could move the market and create some of the Netflixes of the
Yep.
world, right? The post bubble explosion of real new business models using blockchain.
Yeah, the interesting thing is we use the internet as a corollary a lot here, and to a certain extent, it's very good. You have a radical disruptive technology, information, societally changing, big peaks and valleys in adoption. But then there's a part where it doesn't really hold up, which I really think people have to remember, is that blockchain, digital assets deal with real money. So this is financial innovation where you're dealing with actual live asset value, live markets, in areas that we typically have, very high regulation. These are things where, the regulatory environment for the internet was, could you conduct commerce online? And, it was actually a fairly clear-cut type of regulatory and risk around it. You invest in the internet, it's a company. Okay, it didn't do well, it goes bankrupt. You didn't have hundreds of thousands or millions of customers' funds at risk, or live things are like that, or people exposed to jurisdictions and financial instruments that they normally wouldn't be. So you inject this dynamic of the financial industry, which is very regulated, centralized, and heavily controlled, and rightly so, into technological innovation. So this is where I think on that timeline question is we really have to be patient and get these things right and understand that as we transition or create the type of products that allow us to go into the decentralized, transparent blockchain, future, that we're in a very centralized, regulated financial system world now, and that you have to kind of knock these things down one at a time. And it's going to sometimes be frustrating. And this is, some of the things that we do at Arca. We work with the regulators on products that in digital assets and crypto timelines, over several years, which are like decades in this space. But now in this environment where people are looking for more regulation, more certainty about what's going on, just so they can even approach it, so that they have a framework where they can even invest comfortably. I think we have to take care of all of that, cut through the dead wood, solve some of these issues, and really give people comfort that while we're doing these experiments, whether it's sandboxes, environments that allow a little bit more clarity and safety around those type of innovations. But flip side of that, you don't want to stifle innovation. You don't want to cut it off. And then whenever you get regulatory involved in things like that, you always run that risk, over-regulation, driving innovation other places. So I think careful, thoughtful engagement with regulators, knocking down things, like good regulation over centralized exchanges and things like that, and then allowing people to come back into this space will allow that to flourish. While the projects, there's still great projects that are going on in that, but I don't think that you're going to see a real pickup in all of these things, real adoption, real utility, until some of those things are solved.
Yeah, we can get into the regulatory side of it a little later because I'm curious, what something like thoughtful regulation even means, right? In practice with this space, but I guess building upon the use cases and moving over to Jeff, one of your predictions that frankly, and just me personally, I don't know exactly how I feel about it, but you mentioned traditional finance or Tradfi will start to lose market share to DeFi, right? And DeFi I think was a buzzword for a while and had a lot of especially early 2021 and has languished, but it can mean a lot of things. So I'm curious, like what you mean by that, and then in what areas of financial services do you think will actually lose share to decentralized protocols?
Sure, yeah, and it dovetails a little bit on what Rayne said as well, which is, centralized companies are easy to start and easy to run, but obviously have lots of points of failure later on in later stages of their lives. Decentralized applications are very tough to start, very tough to get off the ground, but once they're running and once they're prove product market fit, there's very little you can do to shut them down, even if you tried, and they pretty much operate as expected for perpetuity. And you can go back to even what SEC Commissioner Hester Peirce wrote, I think now 2+ years ago, when she tried to introduce this safe harbor idea, which is we want to give people the ability to try to start decentralized protocols, but doing it knowing that they are starting as a centralized entity, because you kind of have to. You have to have a person in control. You have to have a group of people in control to start something. But then the safe harbor idea that she mentioned was, give them 3 years to move from centralized to decentralized. And if you do that within 3 years, we're not going to basically bother you. And of course, given all the issues at the SEC, this has gone nowhere. But if you actually go back and dig up what she wrote, it's prescient even today. I mean, it's the perfect combination of centralized and decentralized. Let something get off the ground in a fully centralized manner where key people can make decisions, and then move to decentralization over time and let this operate as is. And the reason that's important to set the stage for why I think TradFi will start to lose ground to DeFi is that regardless of whether or not this is kosher under the eyes of the SEC, that's exactly what has been happening. There's been a lot of things that we use today in the DeFi world that actually work really well, have proven product market fit, have a cohort of users where people understand exactly how it's going to work. that have gotten past that initial stage of a single key person started it and is in charge of it, and now it is fully decentralized. And when you look at all of the list of the bankrupt companies this year, every single one of the failures, with the exception of Terra Luna, which is a little bit in a gray area, but let's call Terra Luna decentralized anyway, and we'll call the rest of them centralized. Every single company that has gone under or is about to go under, none of these are mission critical companies. The industry can move on without them, right? And the reason for that is not because these weren't good companies at some point, not because there aren't good people behind them, but because there are perfect substitutes for every single thing that has blown up. Every stable coin that's blown up has a perfect substitute. Every lender that has blown up has a perfect substitute. Every exchange that's blown up has a perfect substitute. Every miner that's blown up has a perfect substitute. And what that means is that if you believe in any microeconomics course you've ever taken, when you have perfect substitutes, there's no long-lasting impact on price because people just move to the next thing, right? When Celsius and Genesis and Voyager go under, people are going to move to Aave and Maker and Compound in the DeFi world. When FTX blows up, people move to DYDX and GMX, who do decentralized protocols who offer the same derivatives experience. So the point is that even by default, even if there's no new growth to this industry at all, you're automatically going to see DeFi increase their market share versus centralized counterparts here in the digital assets world. And by definition, when those are growing their market share within the industry, ultimately, when other Tradfi companies start to get involved, they're going to look at these DeFi protocols as well in terms of using. And you're starting to see it, right? I mean, you're starting to see traditional companies in the space, from JP Morgan to KKR to Apollo, start to partner or get involved in some way, shape, or form with some of these decentralized protocols. So all I'm trying to get at is at this point, you could consider centralized companies within digital assets basically as TradFi, right? Because their failures are the same as any TradFi failure, right? That the problems we saw with Lehman and MF Global and Bear Stearns are the same problems that just resurfaced with Genesis and DCG and Voyager and Celsius and FTX. Right, it was either lack of separation of customer assets from business assets, or it was over levered, or it was sloppy accounting, you name it. Right, these were effectively traditional finance businesses that just happened to be utilizing a new technology in blockchain and happened to be catering to a client base that cared about crypto and blockchain. But ultimately, that usage is not going away. It's just going to transfer and slide over to their DeFi counterparts. And we've already seen some of it. If you look at, shout out to the Block has great dashboards on this stuff. If you look at the overall volumes of spot crypto, meaning the trading volume of just any digital assets, Bitcoin and Ethereum, down to some you may or may not have ever heard of. 2.5 years ago, DeFi protocols like Uniswap and Sushi and PancakeSwap represented less than 1% of the total volume, and most of that volume was on Coinbase and Binance and other places. Today, that's almost 15% of total volume is on Uniswap and Sushi and other places. But right now in the decentralized derivatives world, futures and options, it's about 2 years behind. Right now, it's less than 1% of the total volume. But now that FTX, the third largest derivatives exchange, just went down, some of that obviously has gone to Binance and other centralized places, but a lot of that is going to DYDX and GMX and probably future competitors in that space as well. And I bet fast forward 2 years from now, it'll look the same. 15% of total derivatives trading in the blockchain world will likely be decentralized protocols rather than traditional companies. And you can go down the list from insurance to lending and borrowing to asset management. You're going to see that same growth, and you're going to see that same percentage of the overall pie start to gravitate towards these decentralized protocols that have made it through that initial Hester Peirce safe harbor period where they have gotten past that centralized startup and are now proven decentralized protocols that work and people trust.
Okay, so you're in summary, you're talking about not traditional financial services businesses losing share to DeFi, which to me would imply new business lines. You're simply saying what we've already seen, which is centralized exchanges and counterparties will lose share to decentralized, and frankly, it's just because less of them exist, right? BlockFi, FTX, right? They're going out of business, so there are no there's very few centralized counterparties left. So if you want to call that TradFi, I don't
Well,
know
no, but I think
if
that's
I
where it
agree with
starts.
that,
I think
but
that's I think that's where it starts, but I think it ultimately moves other places, right? So what happens is once these decentralized, exchanges and lenders and insurance protocols and asset management protocols, once they get past that two, don't forget, like DeFi barely existed 2 years ago, right? And
oh,
now,
sure.
at its peak, DeFi, right? There was $200 billion locked in various DeFi protocols at one point in the middle of 2021. Now it's down to 40, 50 billion, but still, up from zero 2 years ago is still pretty good growth. I think it starts with that activity moving from maybe centralized entities within crypto to these decentralized entities, within crypto. But then eventually it starts to gravitate elsewhere as well, right? I mean, eventually, if you're comfortable using these DeFi protocols that have now been around for 3, 4, 5 years and have proven that they work in good times and bad times, you do start to see, instead of going to your local bank where immediately they look at your race and your gender and you look at your financial profile to determine whether you're going to get a loan versus going to Aave and all you have to do is post some collateral and you get the same loan in minutes. Eventually that does start to seep in. Now, whether that's a 2023 prediction or more of a 2025 or 2030 prediction, I don't know the timing of this, but it's all connected. When you see that market share grow and you see that these decentralized protocols outlive their centralized counterparts that do the exact same thing. Don't forget, Aave and Compound and Maker have the exact same customers as Celsius, Voyager, and BlockFi had, but those three still are around, whereas the other three are not. And there's a reason for that, right? It's because the protocols operated flawlessly while the humans behind Celsius, BlockFi, Voyager, et cetera, made mistakes. So eventually that stuff starts to matter. It starts to matter that you outlived your counterparty, even though you do the exact same business with the exact same folks. And that does start to increase confidence, and that increased confidence does lead to more experimental use cases of it. And again, I point to, KKR starting to tokenize one of their funds. That's the start, right? That's not the end. That's the start. Somebody big enough like KKR decided to tokenize a fund. Apollo is looking to do some of their securitizations on chain, right? JP Morgan is dabbling in their internal, JP Morgan coin. You go to, BNY getting involved. You have, I believe it was BNP Paribas who did a DeFi transaction to settle some of their trades. So, the experiment on the traditional TradFi side, along with the increased market share in this, centralized crypto, it's all related. It all starts to move the same direction,
Yep.
which is increased usage of these DeFi protocols.
Yeah, and I don't disagree with that at all. I think that similar to what Rayne was saying, I actually think there's a very clear order in which all of these dominoes need to fall, right? It's not about like, oh, when's adoption going to happen or when are these people going to get involved, right? It's just like the internet. We need we need some rules. We need a regulatory framework. Like how is DeFi actually governed, right? And there needs to be confidence in place for investors that they're not going to get hacked. Like I'd be even me personally, and I'm in the industry, and I have, some, very little, but experimented on Aave and Sushi and Uniswap, and like I would never put substantial assets on there. Like you'd have to be crazy in my mind, just because. Let alone any other one that comes up just because of the risk of a hack, and then there's nothing that can be done, right? Like things like that need to be solved before you see, real widespread adoption. Like there needs to just be some rules in place, some protections in place. And it's nice to say everything can be decentralized, but at the end of the day, yes, it's a trustless system, but you also have to then trust that someone's not going to hack you, right? And that's not trust that I have, right? Because that's not human nature. And I think with
Yeah,
regard to
but
the
it's not. But it's
centralized versus
but it.
decentralized, yeah, go ahead.
Sorry, I was just going to go ahead. I was going to say, but that trust is there. There are parallels there too, right? I mean, 22 years ago, people didn't trust putting their credit card on the internet, and now everybody does it. At the same
Oh,
time,
I'm
there
not
are
saying
still
it's not.
hacks,
I'm
there
not.
are still
Yeah, I'm saying
problems,
it's.
but
Yeah, it's gonna get solved. Like it has to get solved, right? I remember the first time. You know, I don't even remember what year this was, but like, I was with my mom at a grocery store. I don't know, like probably 83, 84, and we saw an ATM machine for the first time. and she put her card in and was like, "Is this thing he's stealing my?" I mean, I remember this vividly, right? It was the first time she used an ATM, and there's tons and tons of examples like this, right? So I think it will get solved. It's just we're not there right now, but it needs to be figured out. With respect to the centralized versus decentralized, like BlockFi, Genesis, like those guys failing, right? Like, you know, people like to talk about AI, and done this before professionally, and like you can't. I don't know why you would, but you can't program AI to be smart enough to like to work in the human greed aspect of it, right? Like BlockFi when it first started, I'm sure had a very noble cause. They weren't saying like, hey, we're going to run an unsustainable business model that will eventually fail, right? Like they had an idea that they wanted to implement, but then when either there was an opportunity to make more money, onboard customers faster, or they realized, shit, this doesn't work. Like, you stretch, whereas the code within the protocol, like it's not going to change, right? It's not going to change based on market. It's either going to work or it's not, right? It's very black and white. Anyway, so I think this is a good segue into one of the predictions that I had, and I think one of the frustrating things that we've seen in terms of price action this past year is the market's really like turned into a zero sum game because the outcome of my prediction from 2022 pre-2022 of kind of large scale institutional assets flowing in has not yet materialized, and we've seen selling, and we've seen some people exit the market. Like it's become largely a zero sum game where it's just money moving around, right? Like I don't think there's a lot of marginal sellers right now. I don't think there's a lot of marginal buyers right now. But I think to your point, we have seen a lot of announcements like JP Morgan and Goldman and BNP and Credit Agricole and all these, Franklin Templeton, all these big banks, big financial legacy TradFi financial institutions getting involved and experimenting in blockchain as a technology. And I think we will in this year continue to see those announcements and progress move. And I think you'll have this dichotomy of, essentially retail and some kind of like legacy players exiting the market while the big boys enter the market in some capacity. And, as I hear you speak, Jeff, about DeFi, I almost wonder, does it make more sense for them to launch their own protocols, right? That then they could eventually decide to, should they choose, make them fully decentralized, right? It could be a JP Morgan lending arm that is, built on top of a private blockchain, but then 3 years they might decide to totally spin it out and make it a decentralized protocol. Now, obviously, a lot that needs to happen from a regulatory standpoint, but that is one that I really think we'll continue to see a lot of positive momentum. There's zero evidence, either what we see publicly nor private, anecdotal conversations that we have that banks and financial institutions are saying, I no longer believe in blockchain as a technology. Like I think it's quite the opposite, and I don't know, Rayne, you want to have any thoughts there? I'd love to hear some of the, conversations that you're having.
Sure. We do a lot of work with TradFi institutions that are looking to energize their current, mainly financial service companies, honestly, on our side of the business, their offerings with blockchain. And the interesting thing here is you really hit it. While there's a desire to implement blockchain technology and they see the benefit of it, some of the lack of clarity or the blockers or the concern about regulatory risk and now reputational risk and things like that make it very difficult. So I think the type of things that you're going to see that are going to actually have more traction are more things like partnerships, acquisitions, doing things outside of the main entity, where they're going to work with people that are native in the blockchain ecosystem, where it's going to be at an arm's length relationship, where it won't be in the fully regulated banking entity, where you can do experimentation and actually have a much more safer, both reputational and technological experience for them. And then the space is so tiny right now. The ability to acquire what works, or see that it just makes so much more sense in that manner. So we're seeing a lot of that, and like you say, we've seen no diminishment on appetite or innovation or things like that. And it's actually kind of energized a lot of the people in our universe who were actually, leaning much more into the regulated space, like digital securities, ATSs, things like that, things that were quite neglected, during the very big run up in the, let's call it the unregulated digital asset space. The actual regulated security space, grew from $1 billion in that space to $18 billion this year. So, you talk about growth and pockets of it. You're seeing a lot of it there. So literally no diminishment there. The only kind of diminishment of enthusiasm, things like that, is concerns about who you work with in the space, how you get comfortable with some of the information you're being presented. And then, reputationally right now, it just, for people, it was usually some sort of innovator or highly motivated digital asset evangelist within an entity, or a core of them, that were pushing these things, usually against some opposition, where we all got very cold water on us thrown by pushing that forward, and it just became, less easy to get things done. So we've seen a pause kind of in this, and making sure everything works out, and really getting your knitting buttoned up, auditors, your service providers, who you're working with, re-underwriting all of that, but no diminishment in the prospects or the excitement about it, or what they see the value proposition. And a lot of people that have been working on this actually see this as a very, very good opportunity, where the kind of the noisy get rich quick crowd has kind of, just like we saw in the ICO crush, that people that are building real things, long-term value things, actually have a little bit more time, where there isn't quite this very, very high pressure for, massive value accretion in like a short period of time. So that's kind of the environment that we've seen.
Yeah, I think that all is very consistent with conversations as well, and going back to the regulatory side, just because I think it is so important, and frankly, one of my three predictions is that we will see increased regulatory clarity in the U.S., and I think this is what ultimately is going to pave the way for not only increased participation of kind of institutional dollars, but we'll see blockchain adoption in scale as a technology. And I think one of the things that is often overlooked is new corporate issuance, right? If any and I'm not talking about it necessarily as a way to raise funds, though that's certainly a possibility. It's more as a way of expanding a business, and it could be something as simple as a rewards program that's tokenized, which is an announcement that we've seen Starbucks make plans to roll that out. But there are so many complications that have to do with regulation and the legacy financial ecosystem, right? Investment bankers, like, how do you underwrite these things? How do you issue them? How do you sell them? Where are they custodied? Where are they traded? Where are they cleared? Who's making a market in them, right? That you can't do traditional capital raising and investment banking like you can do in other financial products. And the big difference between blockchain as a technology and the internet as a technology is, if you wanted to invest in that underlying technology, the means by which you did it did not change, right? It was still equity and debt, right? Whether public or private. Here, there is an aspect of equity and maybe debt privately, but by and large, it's digital assets, tokens, blockchain traded coins, right? Whatever I mean, there's different names for them, right? Like, that's how nascent it is, and it was something that was able to build upon itself over the past decade. And we talk a lot about, in anything, technology outpacing regulation. Well, I mean, this is the biggest example I've personally ever seen or read about, even historically, in terms of the innovation and public adoption and just sheer amount of money flowing into something that has just outpaced any way in which a regulatory body can govern it. So I it's very difficult to say, what will pass legislatively because there are so many moving parts, right? And there's motivations of politics and the U.S. political environment is very different than it was 10, 15 years ago. It was a lot easier to get bills passed, much more partisan now. It's much more difficult, but this is a nonpartisan issue, right? It is about, regulation of a asset class to an extent, and a technology, right? More
Yep.
probably even more so, and that is bipartisan. And I think we've seen evidence of it being bipartisan over the past year, even if there are, partisan narratives that come to the forefront, whether it's FTX or Gensler or what have you. I'm it's very tough for me to put any faith in legislation on anything getting passed, but I think we have a far better chance now than we did 4 or 5 months ago.
Yeah, I think what you pointed out there is interesting, and I think it's actually an interesting pivot point to one of my other predictions. We at Arca, obviously, we're a US based firm. We spend a tremendous time here in the US. We're closest to the US regulatory bodies, but blockchain and digital assets are a global innovation. And this is one of the things that I think is actually very interesting and optimistic, and at least my predictions of what we've seen. We've recently engaged last year much more in the international space, and we've actually found a very, very different environment there. Being in the US, you come from a highly efficient, highly regulated, highly trusted financial system. So when you're talking about replacing it, or you coming up with a counter set of value propositions, it's actually a very high hurdle. It's very fast. People trust it. Nobody doesn't have access to a bank account. The narrative really changes in places like we spend a lot of time in Latin America now. And if you just look at things like something as simple as remittances or cross-border payments, where on average in Latin America, people are spending 8-9% just to send money back home. The immediate utility of blockchain, instantaneous, near costless, has caused an adoption level of people that don't necessarily interact with the financial system to have an immediate value proposition. So this is one of those things when we talked about, the societal benefits of blockchain, financial inclusion, democratization of finance. Jeff brought it up, not having biases on loan applications, being mechanical. These are places where there isn't the same, highly efficient, entrenched financial system, where you're actually seeing the value proposition of the underlying utility of blockchain immediately proved. And we're actually seeing a very different environment there. There was much less exposure to digital assets. They're seen very highly and positively. They're causing real change and like driving financial inclusion and growth in the financial service sectors. And we're seeing some of the highest adoption rates in places with some of the lowest financial inclusion. So it's very interesting. We're very US centric, a lot of dollars here, but the whole part, one of the value propositions of blockchain was democratizing finance, allowing people to have more access, more fair and free access. And we're actually seeing that internationally. So the same way we're seeing, a regulatory and legislature like gridlock here in the US, and we spend a lot of time there, it's because we have a well-established regulatory and legal system that can stay gridlocked and actually still kind of function. In these other places, Venezuela and Argentina have near 100% annual currency inflation. So our hyperinflation of 8 and 9% is kind of old hat to them. This is things where they're not accustomed to, or the idea of an unstable money is very real. The idea of a kleptocratic or untrustworthy government, very real. The idea of a technology that allows you to send money freely anywhere in the world is like magic, and it's being seen that way. And we're seeing just a completely kind of, even though they're a little bit behind on the idea and adoption, the philosophical resonancy of the idea of the why you would want something outside of your controlled financial system, the benefits of that are much more real and tangible there. So we're seeing great adoption and great growth in those areas.
Yeah, I think that's a great point, right? I know myself and obviously there's we have a large listening audience in the US, but we also have a large audience, for this podcast globally. And, when we look at everything, even when we look at assets within the digital assets ecosystem, like at least I think about it, our funds think about it in dollar terms, right? I had a conversation with someone in a project I'm involved in personally, where the person was from Ukraine, and we were discussing valuations of an asset, and I was talking about it in dollar terms, and this person was talking about it in ETH terms, and we just like the relevancy of dollars to me is very high because I can always buy ETH, right? So if something's going to stay priced at 1 ETH and ETH goes from 4,000 to 1,000, right? Like that asset got a lot cheaper to me. For that person, it didn't change, right? And that's an interesting dynamic, and I think it's important that we realize, like, there are many use cases of blockchain, right? And the original grounds upon which Bitcoin was established is exactly what you are talking about, and it goes beyond philosophical. It's real world potential. Now it requires kind of like decentralized but coordinated adoption, right? Because like gold or any other asset that isn't backed by some centralized entity, which I know is it's a circular argument, but like it only has value if people say it has value. So we need to continue to see adoption, but I think that's much slower, right? There's no like single event or single catalyst. They'll be like, oh shit, Bitcoin is leveraged everywhere now. Like it is a true global reserve currency. That's just going to happen over time. And yeah, I mean, it's terribly interesting. The one thing I will say though for 2023 is it's picking up pennies versus billions flowing in from one entity, right? As if you want to grow a market, and I'm talking about it from a financial standpoint, and increase price, the best way to do that is to get large scale institutions involved, right? Not, if you got the entire GDP of Argentina on the platform, like, okay, that's meaningful, but like that's not as easy to do, right? Or at least it takes time. But yeah, I think you are 100% right, and it actually dovetails well into, I think, my first prediction, which I think also goes back a little bit, right? There was a whole narrative before of blockchain, not Bitcoin, and I think it was a lot driven by Tradfi and the promise of blockchain as a technology, and not really understanding or seeing the need for Bitcoin. And maybe it's just because we're looking at it from a US dollar focused lens. But I think there will be a more clear and overt distinction from an investment standpoint between I am investing in, a decentralized currency like Bitcoin, or I am investing in blockchain technology and infrastructure, or I am investing specifically in a Web3 company or use case, right? And I think those are three very different things, and I think there will be we will start to see a broader understanding that these are three very different aspects. I know, Jeff, this is something that we've talked about a lot, and you feel pretty strongly about, and you've even talked about blockchain growth being driven by onboarding of traditional Web2 companies or TradFi corporates, which you touched upon. So I'd love to hear what you think about that prediction, as I haven't bounced these off anybody. But and just kind of do you think we kind of get back to some derivation of this, maybe not blockchain, not Bitcoin, but maybe there's blockchain and there's Bitcoin, and there's Web3.
Yeah, I mean, I think it's already happening. It actually is very similar to my second prediction, which is that the current wave of blockchain companies that are sort of crypto native will be very quickly, not replaced, but will be largely irrelevant compared to the traditional companies that start using blockchain, right? And it's the same kind of thing, is that you're already seeing it, right? I mean, look how many companies have already gotten into blockchain in some way, shape, or form, right? We already mentioned a couple of them, like KKR and Apollo, and and some of the financial institutions, but what about Starbucks, starting to use Polygon for NFTs, and Nike, issuing their own NFTs, and you have some other brands as well, like Tiffany's and Gucci and Anheuser-Busch, and you go down the list, Reddit. None of them are using Bitcoin, right? There's not a single company in the world that has used Bitcoin except for Michael Saylor and MicroStrategy, which is effectively just a Bitcoin holding company. But they're all using variations of either DeFi, Web3, or NFTs, right? And you look at the four parts of blockchain that have been successful, right? Bitcoin is definitely one of them. Regardless of what you think of the future of Bitcoin, it's been a success. It's been around for 12 years, and certainly, everyone has heard of it and knows about it. But the other three are stablecoins, DeFi, and NFTs. Those are the ones where other companies are starting to use it. And you look back again at the internet as an analogy or an allegory, or at least a parallel. The early internet companies were internet native companies, right? They were called .coms for a reason. They were businesses that did not exist before the internet. And then because of the internet, they existed, right? Your Priceline.coms, your Amazon.coms, your eBay.coms, right? But then you look 10 years later, and the biggest companies on the internet were companies that have been around for 50 or 100 years that have learned how to use the internet, right? Your Disneys, your JP Morgans, your Domino's Pizzas, right? Domino's Pizza, online ordering, JP Morgan, online banking, Walmart, online shopping, right? I mean, these companies existed long before the internet, and then they took advantage of the internet, and they added way more users than any native internet company could have done. And the same thing is true now in blockchain, right? But the estimates are there's somewhere between 200 and 300 million, quote unquote, crypto users. But I'd imagine half of those are just people who own some Bitcoin in a wallet and never interact with anything. So let's call it maybe 100 million, like really active kind of, digital asset users. That's smaller than many companies, right? I mean, the airlines have hundreds of millions of customers. Obviously, some of the bigger banking giants have a couple 100 million customers. The retail, guys, your Amazons have, in the billions of customers. Porting over customers from these traditional companies into the blockchain world is going to be way more impactful than anything that's built organically. And that's not to say that the organic growth of digital asset and blockchain companies isn't important. Of course it is. It's the backbone. But it's the adoption of these other companies starting to use blockchain that is going to matter more in terms of user growth and adoption. And none of that's going to come through the Bitcoin lens. It's going to come through these other lenses. Right now, they will probably, in an ancillary or derivative fashion, use a stable coin or ETH, probably not Bitcoin, but they'll use a stable coin or an ETH. It's not like it's not going to get away from the crypto roots, but it is certainly going to be users coming over for reasons other than just trading or hoping to make a buck. And when you think back just at a very holistic level, right, what I think blockchain and really tokens built on blockchain, what they really are, in my opinion, is they're the greatest fundraising and capital formation tool we've ever seen, coupled with the greatest customer bootstrapping and incentive system we've ever seen. Well, name me a single company or entity on the planet that doesn't want to raise money and grow their customers. There aren't any, right? Everybody wants to. So, and not just companies, right? Municipalities want to increase their, the people living in their jurisdiction, right? And they want to raise money. Universities want to raise money and increase the people attending, right? Any entity, not just business, any entity in the world wants to raise money and wants to grow their customers and wants to better align their customers. And once you get some regulatory clarity, or at least you get some more proof of concept from your KKRs, your Apollos, your JP Morgans, your Nikes, your Starbucks, you name it, it eventually becomes irresponsible if you aren't trying to figure out how to use this in some way to either grow a new business line or increase your customer adoption. So 100% that all of these tools that have been built will be the growth of interest in this space, and it won't be just because of Bitcoin or Ethereum per se. It'll be these entities built on top of these protocols.
Yeah, I think that's exactly right, and yeah, I think that second prediction you had, I think, was a very natural segue, and I think the one thing, the one truth out of all of this, and this is not a prediction for 2023 because it's gonna take time, but with any technology, and we could talk about, okay, traditional companies issuing or using blockchain to enhance their business in some capacity, or the building out of infrastructure, or, in what Rayne was talking about, kind of the cryptocurrency sense, and the investment aspect of those is either clear or a little more nebulous, like in a Starbucks use case, right, or something like that. But what we've seen with that, with the advancement of every new technology that's been, revolutionary for society's day in day out use cases, that there are new businesses and new opportunities that come about that no one sees coming, right? Because you can't see them coming, because you don't know how these technologies are going to be used or adopted. And I think that is inevitable, with blockchain, but it might not be something we see for 3 years, 5 years, 7 years. I'm not, I'm not sure, obviously. But that's something that it's hard to not be excited about that. Even though we had different predictions, I think they all dovetailed, really, really nicely into each other. So, Rayne, any closing comments or thoughts? And here's one thing I like before I pass it to you. We just did an hour basically on 2023 predictions, and not once did anyone say anything about price, or what's your forecast for Bitcoin, or what's your forecast for ETH. And anytime I'm asked those questions, I'm just like, I don't know. But I think this is what it should be about, because we can't, too many factors having to do with price in this calendar year. I think over the long term, yeah, I've got pretty good confidence. Can't tell you a number, but we're going higher. But it's really just about what matters, and that's adoption, use case, scale, growth, the technology, regulation, right? Like that's what we are focused on, because if this plays out, the returns and performance will come for those who are solvent and disciplined.
Exactly. Thanks. That's exactly what I was going to hit on, Peter, is that all the things that we're talking about are so interesting, societally transformative. When Jeff talks about the greatest bootstrapping tool for aligning capital and customer incentives, that's really a powerful concept. You weren't able to so align the use of something or the growth of a technology with the market incentive and driving things like that in such a particular way to really have, very specific outcomes around, companies and projects that align those type of things. This is transformational things. But when you deal with things of this size, this scale, this transformative power, they are very long-term projects. There's going to be a lot of things that happen on the way to the fair. And those people that stick to focusing on process, doing the due diligence, making sure that the people that they're working with are good, counterparty due diligence, all the things that allow you to approach and enter this space as safely as possible are going to be the ones that are here. It's about being in this market a long time and not getting blown out or, having a bad counterparty, things like that. Not that these things are completely avoidable, as we can see about that, but with proper risk mitigation, you can mitigate these failures. And it's in a space like this where there is a lot of price volatility, a lot of new actors and things like that. It's really something you have to be diligent and about it all the time. It's not something that can be, I did my initial work. I feel good about that. It really, either you or your partners have to constantly be evaluating that. So just patience. This is an enormous transformative opportunity, but it's going to take time. And it has to be approached with caution, patience, and diligence, just like anything of great transformative nature.
Yeah, I'd echo that and say, look, there's obviously been a lot of losses across the board in 2022, but those who own tokens of projects that still exist and are still functioning, that story isn't over. Those who own the equity of companies that were trying to take advantage of blockchain, that story is over. And, you are getting, most likely get a zero, as creditors take over, if there even are any reorgs. I think most of these companies probably just go away. I think maybe a few of them do successfully reorg, but that equity is gone, right? So there's a very big difference between, betting on a company that tried to be an early entrant into this space and ultimately being wrong and losing that value of that equity versus owning the technology or a piece of the technology and seeing how long it takes for that to grow. And I think, 2022 was obviously very much driven by macro in the sense that, this is the first year since I think 1982 that both the debt markets, both fixed income and equities, were both down 10% or more in the same year, right? So obviously this is well beyond just digital asset investing. It's been a tough investing year for any asset class. But the losses in digital assets, if you're exiting as an investor now, either you never really believed in the technology in the first place, or you basically are trying to time the market, right? For those who stay in it, though, nothing has changed with regard to the progress or the prospects of blockchain as a technology. What you're trying to figure out is what is the best way to invest in that growth, in that future growth. Right? And we say it all the time, right? It's really easy to come up with a thesis for investing. It's very hard to come up with a way to express that thesis, right? If you had a thesis that I think there's going to be growth in blockchain, well, if you invested in Ethereum or you invested in FTX equity, those are going to be very different outcomes, even though the thesis might have been the same. So most people who believe in the growth in the space, most people who believe in some future where all the things we just talked about are true, right? Where traditional finance starts to lose some market share to DeFi, and where corporates and municipalities and universities start to get involved with Web3 and NFTs, and where traditional business lines are impacted in a huge way by blockchain. Well, most of that hasn't changed, right? There's very little of that has changed. So if your thesis is still that, the real question is not, do I get out now and get in later, or should I just be gone forever because it's dead? The real question is, what is the best way to express that view? And there will be winners and losers in this space for the next several decades. And I think that's what we as an asset manager do. That's what others, other asset managers and individual investors are doing, is trying to figure out where is the highest operating leverage to the upside, but also doesn't have that zero as a downside, right? And I think that's where some of these protocols that have proven themselves over the last couple of years to really work and to not just break and go away. Some of these protocols are basically perpetual call options, right? It's very hard to kill them. Even Luna, everyone's heard of the implosion of Terra Luna. Well, the Luna blockchain itself still exists. Now, whether or not that's going to reach adoption again, and whether or not people will trust it and use it is remains to be seen. But the blockchain itself still exists. The token still exists. In 20 years, who knows? Luna might come up with a new use case in the same way that Amazon became more than just a bookstore. So, when you're investing in tokens, I do think you actually have a little bit more downside protection than you do the equity of some of these companies trying to get involved in blockchain, simply because it's really hard to kill them. They don't go bankrupt. There's nothing that primes you in terms of seniority or claims. You're just betting on how long is it going to take, and will it be one of the winners in the future? And I think there's still plenty of candidates in this space that are like that. Solana is a good example. I'm not personally a believer in Solana, but Solana still works. It still produces blocks. There's still plenty of developers on there. There's still plenty of applications in the future that might come about. Just because it's had an incredibly rough 2022 and has all these ties to FTX and other companies that have gone under, doesn't mean that the perpetual call option nature of what could in the future be built on Solana doesn't still exist, right? It still does. So I think there's an element of that your investors need to understand, is that you are basically not changing your thesis on blockchain. You are changing how you're going to express that thesis.
Yeah, and I think this is important, right? The ties of, say, Solana to FTX, right? The mechanics of what made the price crash even further than it already had, is analogous to traditional distressed investing, right? And if I had to add another prediction, and I probably should have done this in hindsight, was like, we will look back on this and see 2023 as the start of what I think could be a really incredible opportunity from a distressed investing standpoint. And I have a kind of an amusing anecdote. So like, we're obviously just getting out of the holiday season and Christmas, and I showed my kids, It's a Wonderful Life for the first time, and actually liked it a lot more than I thought. And I was, walking my dog with my wife the other day.
I like that.
And I was talking about, distressed and investing and where I think certain opportunities could be. And I even used that and I described it. She's like, oh, like Potter. And I was like, yeah, exactly like Potter. And then when they doing the bank run and George Bailey's Potter, and everyone wants to redeem from the savings and loans. Potter's like, Bailey goes to everyone. Potter's not selling, he's buying, and he's trying to buy the equity. He's offering 50 cents in the dollar, right? Potter would be making a freaking killing right now, right? You look back in 5 years, be like, fucking Potter, sorry, I'm not supposed to curse on this. He, buying all the, I don't know, Solana or Ether, whatever Potter's buying, right? Like Potter would love this market. Like he is rolling over in his grave, calling his granddaughter, trying to get her to put money into ETH right now, right? Like there are distressed opportunities. That is what we will see. And even in the end of that movie, Potter goes back to George Bailey and says, when he tries to hire him, you and I were the only ones that kept our heads in the bank run, and they were solvent, right? So like that's really what it boils down to right now, I think, is solvency and who's keeping their heads, right? And if you're selling because you don't believe in the tech, that's fine. You got into it for the wrong reasons, that's totally fine. But like, if you believe in it, there's huge opportunities right now, and I'm not saying that price is going up in 2023. I hope it does, but I don't know if it will or won't. There's a lot of dynamics at play.
I like that. First of all, heartening that your children liked A Wonderful Life. Secondly, interesting.
They also like the
distressed
Gremlins.
Debt. That's okay. It distressed debt talk at the Hans family Christmas while walking. I also enjoy that. And I think that that's exactly correct for the people that are sellers here and are out of this technology. I think, speak for myself, we're buyers of this. It's short-term price unknown, but really almost infinite upside in where this technology can go in this future.
Absolutely. Well, guys, as always, really enjoyed the conversation. Appreciate it. Jeff, I know you're on vacation, so go to your family, and we will talk all soon. Thanks, everybody.
Thanks, Peter. Great talking to you.
Thank you, guys.
Bye.